Hi, I'm Amberly Mason, and in this edition of the 3-Minute Trading Expert, we're going to cover the most important thing ever said about trading. Just about everything we'll cover in this video series, every strategy, every vocabulary word, and every tip comes down to mastering this idea. Here it is. It's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong. I'm going to show you exactly how this quote works and why it's so important using a series of sample trades. By the way, this quote comes from George Soros. Whatever opinion you might have on his political beliefs, you have to understand that he's one of the world's greatest traders. He's worth billions of dollars, and he earned almost all of it trading the markets. All right, so why is Soros's quote so important? It's important because no matter who you are or what strategy you use, you're going to make losing trades. If you trade for many years, you're going to make lots of losing trades, dozens of them, hundreds even. Of course, if you develop a solid trading strategy, you're going to make lots of winning trades as well. You hope your winners outnumber your losers, but here's the thing, your batting average barely matters. It's much more important that you maximize those winners and minimize those losers. Let me explain. I'm going to show you 3 common trading strategies using the same 10 trades. 4 of these trades are winners, 5 are losers, and 1 is a break-even trade. To help illustrate the effects of the different strategies, let's say that we put $10,000 into each trade for a $100,000 total investment. All right, here are our 10 trades. As you can see by the math, you're pretty much even for the year, but it could be worse. For our second strategy, let's say you always close a trade when you reach a 20% gain. This is something beginning investors sometimes do. You figure you can't go broke taking profits. But let's take a look at the numbers again using the same trades. Here's what your portfolio looks like. By simply cashing out your winners at 20%, you're now down nearly 13% for the year. Okay, now let's say you follow George Soros' strategy. You let your winners run, but you always close a trade if it drops 10%. Here's what your portfolio looks like. By using this strategy, you're up about 15% for the year. And remember, you registered these gains with a miserable 40% winning percentage, worse than you'd get flipping a quarter. That's the power of George Soros' quote. You see, whether you were right or wrong didn't change. You still made 4 winning trades, 5 losing trades, and 1 break-even trade. You achieved this extraordinary result simply because you were patient with your winners, making a lot when you were right, and impatient with your losers, losing just a little when you were wrong. By concentrating on making as much money as possible when you were right and losing as little money as possible when you were wrong, you turned a $12,600 loss into a $14,600 win. In this case, it resulted in a $27,200 difference for 1 year of trading. And that's the difference you get when you take the most important thing ever said about trading to heart. And since it is the most important thing ever said about trading, let's go over it again. It's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong. So be patient with winning trades and ride them for large gains, while simultaneously being extremely impatient with losing trades and cutting them short. If you do that, you're almost mathematically guaranteed to win. I'm Amberly Mason, thanks for watching, and good trading. If you want to learn another incredibly powerful trading secret, click here to watch the next video.